Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. PPI data just hit, so we have some action in the markets here. PPI data coming in better than expected. We'll take a look at that. We also have news on Starbucks. Starbucks poaching the CEO from Chipotle. That stock is ripping this morning. We'll look at the chart levels on Starbucks. And also we have Home Depot earnings out early here in the morning session. So that stock, again, making waves based on what it's saying about the consumer, which I've been preaching for the last 6 months. All right, into the action we go here. Let's take a look. What do we have on the charts? We have the PPI data first and foremost. Take a look at this, guys. PPI data coming out at 0.1% versus 0.2% expected. Remember, that means less inflation on the producer side. Producer price index is what PPI stands for. The next one here, we have PPI year over year, 2.1% versus 2.2% expected. So overall, better numbers on the PPI front. And that, again, is giving the market reasons to cheer. We are seeing, again, we were actually trading up going into those numbers and then saw an additional pop. This is when the news hit right here at 8:30 a.m. Eastern time. You can see we had an additional move up, small pullback, small up, and now small pullback up here. But suffice it to say, the S&P is trading up nicely today. If we look at where we closed yesterday, we closed right here at around 533.30, and we're trading at 536.30. So about a $3 gain on the SPY. That equates to about a 30-point gain on the S&P 500. All right, so what are we looking at here? Let's go to the daily chart. This is my crossroads. I'm going to call it a crossroads here because it's 3 different trend lines that are all within a very small amount of resistance. This is the level that I started talking about to you guys probably last Friday. That was the first time we really started talking about how high this bounce could go. Went over it yesterday, and I'm going to go over it again today because we're going to be closer. We're getting closer and closer to that level. So what we're looking for here is, again, the lowest level would be around 543. That would be the gap fill. Just above that, you have the cross section at around 546. But that is going to be epic resistance. If the markets rally into that, you should be expecting, based on probability of chart analysis, of technical analysis, we should be expecting a pullback on the S&P. Now, how big of a pullback? Well, based on technical analysis, we should actually see a big move to the downside again. Eventually, by the way, taking out this low. All right, we've broken this upsloping trend line. We ultimately have to go to the next one. If we zoom out on the charts, where would that next support be? It would be right down here at 456. Please note that this is an upsloping trend line. So if we extend this out, right, it goes higher and higher. So if it's over here when it hits, is at 462. So you always remember that trend lines are mobile, just like price action is, unless they are horizontal. If they're horizontal, the level's the level. It never changes. Again, that means this would be a horizontal trend line right here. If it's upsloping or downsloping, over time, those levels will adjust based on the trend line. All right. So again, that's what we're looking for here in terms of price action, is a move up into that range. Next up, let's take a look at NVIDIA. I've isolated down my 2 upside targets on NVIDIA. If we flip over to the daily, the intraday chart, excuse me, we can see that NVIDIA was trading up pre-market, and then look at the move it had on the back of that PPI data. Monster move to the upside here. So again, we're up at 113 now on NVIDIA. And if we flip back to that, where is our first resistance level? It's right around 117.5. So we're looking at 117.50, 117.75. That's R1, resistance number 1. And if we break that, there's a big gap fill up here at R2, and that would be at 126.70-ish approximately, all right? That would be a secondary level to watch. All right, so those, again, are your 2 levels on NVIDIA. We're actually not very far away, only about $4 away from that first level of resistance. Okay, now what's going to be interesting is we have some earnings later this week coming out. Cisco Systems reports later this week. Also, Applied Materials. Applied Materials is kind of in the chip sector. Cisco Systems not so much. That's more networking and so forth. But nonetheless, Cisco Systems should be one to watch when they report earnings because it is a decent sized company, not like it used to be. That was the darling during the .com era. In fact, let's flip over to that chart and just take a quick look. at what I see on that chart level, okay, or on the charts. So one of the things that looks like I had isolated down here was this head and shoulder pattern. And that, again, is not a good pattern to see on a chart. It's already broken to the downside. So, again, we'll have to see what happens on earnings. But based on this, it looks like you would have a slight negative bias on it going into those earnings results. Just a note on that, earnings on Cisco Systems are on Wednesday after the close. And then Thursday after the close, we have Applied Materials. AMAT is the symbol on that one. But this chart is not a great chart going into earnings. It certainly looks on the weaker side for Cisco Systems. Okay, a couple other things to note here. Home Depot reported earnings this morning. If we look at the daily chart, I love doing this, guys, with you guys, because if we look at the daily chart in general, what do we see here? Well, we see a sharp move down, and then we kind of see this inside bar action, right? Which, again, if we know our chart patterns, which we do, what type of pattern would this generally be? It would be a bearish pattern, right? I mean, that's not a healthy chart. Big move down and a lot of sideways to slightly up chop. That's consolidation after a big move down. And again, that denotes that potential for a bearish flag pattern. Now, initially, when Home Depot reported earnings, we saw the stock dump out pretty sharply. In fact, it took the futures to the downside. So if we go back here, look at this big drop here on earnings, taking it all the way down to about 327. But then we had this big bounce back, and it's kind of trailed off. And I think the bounce back, this portion was right when that PPI number came out. So the idea is that if the Fed is going to lower interest rates, it may help the economy stabilize and maybe keep us out of recession. Therefore, there were some buyers that came in here. But either way, it looks to me like you're just seeing ever so slight downside on Home Depot. But again, the chart definitely gave us that angle where you would have expected a little bit of weakness going into earnings, right? Now, one of the things to take note of here is what did Home Depot say? Well, they basically warned on the future earnings numbers and said that the consumer is struggling. And again, that's something that I've preached over and over again to you guys. We've been seeing that, and I've been continuing to talk about how, just the boots on the ground. You just go out and talk to your friends and various people out there, and you can tell that people are struggling. I mean, there's obviously people that have a lot of money in investments that are doing just fine because the stock market still is extremely high. But if that stock market goes, which it's already started to, it's going to cause the higher end retail to start to suffer as well. Right now, it's lower end, right? We've seen McDonald's warn, even Disney. I mean, Disney just came out and talked about, their parks, their theme parks are really struggling because it costs an arm and a leg to go to the theme parks for a family of four. It is not cheap, that is for sure. So in any case, we're just seeing more of the same from Home Depot. If Home Depot does start to decline more rapidly, where would that first level of support be on the charts? I would basically look at the low from COVID, take that low, stretch it up here, and then right there, that would be my first big level of technical support. All right. Now, what's interesting about that is that you basically could also utilize this, right? I mean, we could also take a trend line right through here, and from this high down here, and it almost coexists right around that 300 to 310 level. And so for me, anyways, that would kind of be the zone of where I would say, okay, well, if Home Depot happened to dump down, let's say to 300 or right around there, maybe then you get a swing trade bounce. But I would caution anyone about, and I did, by the way, I talked about this on JetBlue as well in trading the close yesterday. Be very careful if the economy is going to slip into recession, going long stocks too early on. Just like, and I made this mistake with a few different plays. Luckily, I've made so much money via a lot of the other swing trades, but, shorting too early in a bull run that gets nutty in terms of upside. The same thing can be said on buying too early when the markets are flushing to the downside. Okay. So Home Depot, a big mover today. Starbucks is also in play here. We got to talk about Starbucks. I actually already day traded Starbucks this morning. I shorted this Pierce right here of 88.50. I'll show you why, but let's talk about the news on Starbucks first and foremost. Starbucks is up 15+% after they basically poached the CEO from Chipotle. So Chipotle, we know, has been a darling of the market, amazing darling of the market, in fact. And that stock until recently has just gone parabolic, right? Now, they grabbed that CEO, and Starbucks investors are just loving this news because of the growth that was generated out of Chipotle for years and years and years. And so the idea here is that Starbucks will do better because they have a CEO that must have the secret sauce, pun intended with Chipotle, right? But ultimately, that's the key that we're looking at here. So investors cheering, the stock having a big surge, trading up around 88. Look at this level here. This is, again, a level that I shorted already. I already covered this short for a little over $1 gain on Starbucks. But notice the big gap here, huge gap. And look, gap fill was right there, right there. All right. In addition, if we zoom out on this, you can also make a case that you had a down sloping trend line right in the mix here. And again, that potentially gives us a secondary factor, but really cool level here on Starbucks. Now, I'm a little iffy if I'm going to short it again up here. The reason I say that is because if we go back to the intraday chart, it's kind of actually inching above that trend line now, right? So it makes it a little bit trickier to say, okay, well, this is usually the first hit is always the methodology. And I want to just do a quick educational example. So let's just say we have a trend line like this, right? And we have price. Let me grab price is coming up. Let's say price is coming down into it. Your best trade opportunity is your first hit of the trend line. That's your highest probability. Once it hits again and again, right? And again, eventually what happens? It breaks. So highest probability for a bounce, second highest probability, third highest. And again, as once you get to second and third, it's like, well, now the odds are closer to 50%. You don't necessarily want to pull the trigger on that because there's higher risk. The first hit is always the best. That's always the best of a trend line. So the first time you fill a gap, it's like, okay, that's the best. Now, granted, this is pre-market. So, do you include pre-market? I think to err on the side of caution, you probably do. If you're really high risk, you'd still short Starbucks here, but just be really careful on that, folks. That's always a general rule. The first hit is the best for a trade. After that, you start playing, Russian roulette essentially on the next few hits. Now, if Starbucks continues up, is there a secondary level? And the answer is actually yes. There is. If we look at this, there's a very good baseline right here on the chart at around just above 90. So maybe that's the better play now. If we get above 90 here into the open for a shortable level for a day trade on Starbucks. Now, again, some of you may be thinking, well, what about a swing trade? Would you short it here? No, I wouldn't as of now. I mean, first day up, there's a lot of shorts here. Let it kind of peter out and then reevaluate. You might miss the trade on in that, but I'd rather miss a trade than get in a bad trade, essentially, right? And just naturally, I always say this to people that naturally, when you take 1,000 trades, you're going to have some bad trades in the mix, but you don't want to go and raise your probabilities of that by just taking arbitrary levels that maybe aren't as good based on, mediocre factors, right? Okay, so that's where we stand on this front there. I'm going to continue on through, guys, as always. So instead of taking a little commercial break today, we're just going to continue to go through. So I want to flip over to Bitcoin here real fast, and we'll get into the Bitcoin action. Let's go back to the charts. Here's your Bitcoin chart. And again, Bitcoin is just hovering below 60,000. And basically, you have these two trend lines here. If I zoom out, you can see where they come from. This trend line marked a baseline right here. You did pierce it, never confirmed. Pierced it, finally did, and then you kind of got back above and then came back below, but still a level there. And then the upsloping one is really the more important one here. That's the bigger one, which again, price still has to get above and confirm. So suffice it to say, just to give it the easiest layout possible, basically, as long as you stay below this zone here, you have a negative bias on Bitcoin in the short term for a potential move back to 53 to 54,000. If it can get above and confirm, it becomes bullish with upside resistance going back to this zone right here around 68, 69,000. All right. But again, right now it's below this level. So that favors that potential for a downside pullback to this level. Okay. Notice how the PPI data not doing much to Bitcoin today. So PPI data not having much of an impact. We'll keep an eye on the other data here tomorrow. CPI comes out tomorrow at 8:30 a.m. Eastern time. Looking at Ethereum, guys, Ethereum is still below its key resistance level. Had a nice day yesterday, but pulling back a little bit today. I still think it likely will go attack that level, but as of now, you have to respect that level that it's going to stall out. And ultimately, that leaves it vulnerable. Same thing as Bitcoin. Unless it can establish and confirm above here, then you have to be into resistance. You would favor a pullback, maybe even a trade back down to the low 2000s. Next up, gold today. Gold is flattish even after the PPI data came in less than expected. Gold, again, is not doing much, but let's be fair. Gold has had a huge move up going into the PPI data. So it needs a pause day. And in fact, if we get CPI data that's equally as weak, maybe tomorrow's the day where gold makes that move to 2,500. I do think 2,500 is coming here, though. I would say within the next week, I'd be somewhat surprised if we don't tag 2,500. The reason I say that is because at this point, you've gotten so close to it and you keep on hammering on this high level here. So you have pivot high, pivot high, and pivot high. In fact, now that I look at it, it looks like it's almost a perfect little downsloping trend line, right? Look at that. Exact high to exact high, and you just touched it today. So if we can get a break of this, boom, right up to that high end of the channel on the chart of gold. Okay, so again, gold should head up towards 2,500. Once it pierces 2,500, I think, again, in general, we'll see the media start to go nuts over it, and that probably marks a short-term top for a small consolidation pullback, and then the next leg up comes in and takes us probably, honestly, 2,800, I would say, is very, very doable. Silver, remember, silver's the one that still remains in weak position. So gold has been bullish for the last few days, and that continues to stay bullish. Silver remains bearish and has even after these up moves because it hasn't taken out this down sloping trend line. So you can see it's getting rejected off of that in the short term. If we come down and take out this low here, you ultimately head down to the zone here where I will start to really buy more heavily on silver, and that would be in the 25-ish range, give or take. Right down here, we have a big area of support. Next up, let's take a quick look at oil, which had a monstrous move yesterday, breaking all my key minor resistance levels. There was a minor resistance level at this high. We blew through that. That starts to get me thinking that maybe we're headed back to this level. If I zoom out on oil, look at this beautiful wedge pattern. So again, I mean, literally you can align all the lows and the highs. They all line up. And it just tells us a very strict kind of, well, where do you think it could go? Well, I mean, the high level where you would look to short oil would be right here. I mean, it clearly showed it here and here. So we would just go with that same thought process that if it gets up to that range, that would be a pullback candidate. If it breaks out, you stop out. Just that simple, right? I mean, it's just a very defined level where it doesn't become a guessing game. It's very strict. This is your level. Above it, it could be a breakout. As long as it stays at or below, it's fine. Now, I would use confirmation on this because I do think that institutions know that the line is here, and so they may mess with you. Like, for instance, they could push it through by 30 or 50 or 75 cents. As long as it doesn't confirm, I think you favor a pullback, that the level is still valid. If it confirms, then it takes the probabilities that it's a game of the institutions down to a very low percentage. Okay? Natural gas. I sold that natural gas UNG with members of Smart Money Commodities yesterday into this level here, or just above this level. It's basically up there, again, retesting this level. But again, notice how yesterday it got rejected and came back in. Today, it'll be interesting to see if it does the same here. All right. Other stocks that reported earnings this morning, just quickly going over them. There's not a whole lot of big movers. SE is having a nice little uptick here, initially flushing to the downside. But again, this one is one that used to be just an incredible. This is the monthly chart. Look at how crazy this monthly chart was. $370, and it got all the way down to like $36 over the last 6 to 12 months. Now it's inching up, consolidating, and it looks like it's upticking a little bit. If we go to the weekly chart, you can see again that we can see if we zoom out on that. This is the weekly chart on SE. Other than that, again, Home Depot was really the big name of the morning. One other thing I want to point out, guys. So tomorrow morning, there's not a whole lot of earnings, but tomorrow after the bell, Cisco, and then Thursday morning, Alibaba, JD.com, Walmart, and Deere. So actually, Thursday pre-market is going to be very active. Watch that very closely. So again, just to go over the data here, we have CPI data tomorrow morning, right? So we have PPI this morning, producer price index. Tomorrow, CPI, consumer price index. Arguably, consumer price index is much more important because it's the consumer felt inflation. I think that's what the Fed is more worried about, although producer eventually does translate over to consumers. And then what we have is, again, Cisco earnings tomorrow after the bell. And then on Thursday morning, Walmart and Deere. Walmart's going to be big after Home Depot. Is Walmart going to say the same things about the consumer, that the consumer is pulling back? That could be pivotal for the overall markets as well. I've given you guys the levels on the S&P to watch. We've looked at Bitcoin and gold and silver and other stocks. This is what it's all about, taking a firm technical view, which is probability based on the markets and on stocks and on crypto and commodities, so that we can have a firm view of what is likely going to happen. Not guesses. Guesses, leave it to social media and the mainstream media to guess and just spew out nonsense. All right, guys, I'm going to get going. Thank you so much for tuning in. You guys are awesome. I really do appreciate each and every one of you guys. I know your time is valuable and you spend 20 minutes here or so with me every morning. It means a lot, and it means a lot to Verified Investing that you guys are supporting us. So I thank you so much. Have a good one, guys. Take care.